Look at the charts. Equities ended up closing a little bit mixed. We had the NASDAQ positive, the S&P positive, the Dow negative, and the Russell up 0.4%. Overall, the market continues to grind a little bit. If we look at the S&P 500, we've gone from a little overbought to oversold. We had a little bit of an overbought on Friday. The market sold off and ended up kind of pushing back up, but more or less taking a bit of a breather after hitting this short-term FOMO level on the market. And, the market's trying to just figure out which way, if it's going to keep grinding higher or what. At this point, we still have, the trend is still up. We do have a ton of warning signs that the market is brittle, and we're probably going to see some very sharp few red bars at any point. But at this point, we got to just continue to go with the market because it can keep going on for a long period of time. But there's all kinds of interesting things, like if the put-call ratio is back down into a level that is signaling everyone is very bullish. Now, this is a tough chart to read. It's pretty ugly, but bear with me. The general rule is the value of the 5-day moving average is at a point where the stock market usually has some type of pause or pullback. The last time we got over here, we got down to this level, the stock market had a little bit of a pullback. If we go and we look also at the utilities ETF, they continue to ramp up and they're starting to really take off and outperform the stock market. And typically when this defensive sector does well, we need to be aware that usually we're going to see a quick pause or pullback in the stock market. It doesn't mean it has to be huge. The market pullback only has to be really for a day or two, and it can reset things very quickly. Last time the put-call ratio and things were out of whack was right here. We had literally a 1, 2, 3 day little pause and pullback, and boom, we're at all-time highs 3, 4 days later. So again, these are very small little things, but they at least keep you in tune with the market of what's going on, of if we should be expecting a bounce and a bottom, or if we should expect a little bit of a pause or pullback as the market works its way up. Now, both the S&P 500 and the NASDAQ keep having these spikes. There are a lot of stuff on the 30-minute chart, even the 10-minute chart keeps giving us these price spikes, and these spikes, they happen at 8 o'clock in the morning usually. And I have this little tool that shows me 33% of the spike, 50%, and 100%. And usually the market wants to go and tag at least one of these spikes that meet the criteria. So for example here, obviously all 3 spikes were hit on this day. We had a spike down, and then the market opened and it came all the way down and filled those spikes. We had a little spike 2 sessions ago. The market came up and really hit 1 or 2 of those spikes and then rolled over. And today the market, as I mentioned this morning, was set to gap higher, which I'm not a big fan when the market is going to gap higher. We had a spike telling us the market could fall down to these levels, and it did come down and filled 2 of those, almost hit the 3rd spike level as well. Overall, the market, is pulling back a little bit in overnight trading. We're seeing it down about 0.2%. But again, that's also because we had FOMO really just a couple days ago, and the market's trying to digest that. Now, one of the members said they had saw me, or I was talking about the S&P 500 hitting a Fibonacci target, and they gave me a value, and I don't know how I came up with that value. I'd have to look at it, but more or less they were saying that the S&P 500 index has hit its target. I'm not sure which way I drew that. Actually, I think I do now that I recall. So based off this last big wave, we still have more upside potential for the S&P 500. I think the one I was looking at, we were doing these small measured moves, working our way up this chart from the low. How did we do that? I think we went from here to here, and I can't remember exactly where we went, but we walked our way up this chart. It might have been to this first pullback, and it brought us up to here. But either way, my point here is just because a chart is hitting a Fibonacci level, like on the S&P 500, doesn't mean we change our ACS strategy, our rules. We still follow price and trends. When I do a discretionary trade, when I shoot from the hip, I see a chart set up and it's outside of the analysis of the ACS strategy, because the ACS strategy is built with a lot of things under the hood that allow us to predict the market, but you can't carry that over into a commodity. It's a totally different beast. There's not the same data available for me to track that. So when we do a discretionary trade, like our gold trade in PHYS, or whatever ETF or you decide to take that trade around, I stick with Fibonacci targets. So I don't get too caught up with the S&P 500 and the NASDAQ. If we look at the NASDAQ, it has hit our 100% measured move target. based on, we go way back here, based on this standout low. It rallied up to this high, it pulled back, we hit the 618, we've hit that 100% level, and it is continuing to push higher and up through that level. So again, we don't use those specifically for trading the indices for this type of trade. We follow our strategy, which is much more refined than the Fibonacci for this particular scenario. Now let's move over to a couple trades. XLC, one of you, we haven't talked on it in a little while. We still hold it as with the band strategy. If you're using the band strategy, it's at a series of nice bull flags and rallies. If we look at it in the hot list here, you can see we had our entry price, our entry point. It's had a very nice run up. It's hit one of our targets. And really, we're just letting it kind of work itself out now. It has a nice A, B, C correction. A C correction means this wave breaks this low right through here. Usually when the market comes down and breaks a little standout low, it'll usually run the stops. It'll spook the market out. It'll flush it out. And today's price action actually looks like that. We actually sold down and then it reversed and had a fairly strong close. So this looks kind of like a little bit of a bottoming candle, a bottoming tail, meaning we might start to see this move higher. And of course, this is still a nice looking chart overall. It's surprising that it's been underperforming while the stock market's been making some highs, but also that means if the stock market maybe pauses for a little bit, this sector may come back to life. So there's obviously some rotation going on in this, out of this sector and into stocks and all over the place. If we do take a look at our hot list again, it's very commodity and lucrative stock sectors at the top: clean tech, silver, copper, lithium, uranium, marijuana, silver, all of that stuff, blockchain. So they're all up there. So definitely money is piling in, chasing returns, and that's one of the reasons why we're seeing money move in so fast right now. We keep seeing the markets rise. PHYS, this is our gold play. I know many of you traded leverage ETFs. I know a bunch of you traded miners on these signals, which is perfectly fine. You guys can do whatever you want to do. When gold has a big rally and set to rally, we usually see everything related to gold move higher. And we've had this beautiful measured move to the upside. We hit our first target. We did lock in gains. We're actually very close to our next target. We're only 1.5% or 2% away, actually. I think I miscalculated that in the members area with a comment. I was looking at a different price value, but we are in striking distance, potentially a day or two away from our next Fibonacci target with gold. And this is a very nice little trade. We've seen this have a beautiful run, about to hit both of our key targets, and we can lock in gains when that portion is hit. Another member was talking about AI, and they're looking to use AI to do their stock picks. They have a friend who's using AI and has had really good results. My thoughts on that, I use AI for all kinds of stuff. I'm building all kinds of systems and robots, and I can tell you it is far from good. It is far from reliable. I wouldn't trust it. Even just using eSignal here and you program systems into it, it is so hard to create a strategy, an automated strategy that runs without bugs and issues and scenarios or values that are, that will cause a system to lock up. And then give it to AI. I swear it is like a fifth grader sometimes. It just refuses and changes things on you, and it so much doesn't make sense. So I'm not a big fan. I think it's, this is how the whole world goes around. There's going to be a lot of people that move into AI, and people are going to be marketing AI trading strategies. I wouldn't trust them with a 10-foot pole. It's just not worth it. I use enough AI every day and work with experts in it because I want to try to learn it and master it and use it for a bunch of stuff. But I'm telling you, it is not to be trusted, and definitely not with your life savings. I'll put it that way. And of course, somebody who's using it and is having really good luck right now, just keep in mind, look at the markets, right? Pretty much everything has been moving up and to the right. So as long as the system's saying buy, which is pretty much what most systems are designed to do, you're going to do really well. The big question is, how does it perform when everything does change, right? And that's where our strategy, we underperform on the way up, but when the market collapses and falls or trades sideways for years, that's when we keep pulling money out. That's when we catch up and bypass the people who just buy and hold and make a fortune or show big gains, but then give it all back and go dormant for potentially a year or two or longer, and also give back a huge chunk. So we always underperform on the upside. We make it back later. It's a very opposite spectrum of what people are used to. Or, if you're in the space and you're aggressive in stocks, you're really cleaning up. doing well with this market. And then, of course, when you go through one of these, you're usually suffering and struggling. So we really have the flip side of that. We do all right while the market's going up, and then we do well when the market is going down or sideways when everyone is giving gains back. Let's take a quick look at bonds real quick. So bonds have a pretty good little pullback today. It looks like they're down into support. And the big question, as we've talked about the last couple of weeks here, is this a little bit of a base and it's going to try and break out and start to go higher? Or is this seen as a bear flag and it's going to move down and come into the middle of this kind of range, the support level through here? And that's what we're kind of waiting to see. Again, this whole move in bonds with the Fed cutting rates, this is pure speculative, people just front running the news. And so bonds went up and everybody anticipating that. And if we go and we look at the yields, of course, everybody was doing the same thing. People were dumping, the yields were falling because they were expecting rates to get cut. And then suddenly, boom, the yields start to bounce after that. So again, just because following news is very difficult and markets are always out of whack from the reality of what's going on. And that's one of the reasons why so many people are like, why is the stock market going to all-time highs? Like there's a lot of bad news, all of that stuff. It's just the way the markets are. The markets climb a wall of worry. They generally don't make sense, which is why you need a strategy to just follow the trends. And if the news doesn't make sense and the fundamentals and all that stuff around stocks, and what's the point of even listening to them, right? That's the whole point of just following these trends. It's pretty straightforward. If we take a look at the mags, this is the Magnificent Seven. They have been building a launch pad. And the big question is, if this starts another run, we are going to have that nice push higher in the indices, which we are positioned for, and that we could see a final squeeze to the upside. But we need to see how this is going to unfold over the next couple of days. Which way is this going to resolve and break? But again, the markets are still in an uptrend. Let's just hold tight, let things unfold, and we'll go from there. Take care. Bye-bye.